Welcome back to the Iraqi Dinar Hub channel. A subtle yet monumental shift appears to be unfolding beneath the layers of global finance. What was once dismissed as rumor and relegated to speculative circles is now surfacing in formal briefings, economic papers, and institutional recalibrations. Whispers of a system reset have evolved into real-time adjustments that hint at execution rather than hypothesis. The signals are subtle but widespread, with updates rippling through cross-border financial frameworks. Banks from the Gulf to Southeast Asia are reportedly aligning infrastructure, adjusting settlement codes, and pre-positioning for updated valuation models. Attention is zeroing in on three currencies: the Iraqi Dinar ICD, Vietnamese Dong VND, and Zimbabwean dollar ZWL. Previously dismissed as unstable or artificially pegged, they now appear to be emerging as central pieces in a recalibrated monetary mosaic. Coordinated moves suggest these nations are recalibrating values in alignment with reserves, resource wealth, and global parity indicators. If validated, the shift could mark one of the most significant realignments in recent currency history, especially for holders who've remained patient, watching for any hint of revaluation RV. The momentum is growing and the implications are enormous. Within the past 48 hours, analysts have flagged a series of irregular events inside the global clearing ecosystem, events that deviate from normal operational patterns. These developments were not isolated but spanned multiple regions and institutions. Several international banks, including those based in the US, UK, and GCC, reported abrupt overnight settlement delays. While no mainstream announcements have been made, internal memos confirm that these were not due to technical issues, but scheduled recalibration pauses. Sources close to Bloomberg's banking analysis division have termed it a protocol cleanse, describing it as an infrastructure-wide purge of legacy exchange parameters. This type of synchronized reset activity tends to accompany macro-level monetary pivots, whether revaluations, reserve restructuring, or digital implementation phases. The IMF and World Bank remain publicly silent, yet their non-response is typical in the lead-up to structural realignments. Observers are beginning to draw connections between these movements and high-level monetary shifts last seen in past monetary transformations. Such patterns suggest that major changes are not just being discussed, they are already underway behind the scenes, potentially only weeks away from public exposure. Meanwhile, evidence from Iraq, Vietnam, and Zimbabwe shows tangible signs of financial positioning. The Central Bank of Iraq (CBI) has recently issued documents referring to rate harmonization aligned with international valuation templates. The language echoes Kuwait's pre-revaluation narrative from the early 90s. In Iraq, the dinar has long traded under suppressed value metrics due to post-conflict instability, sanctions, and externally imposed fiscal constraints. However, Iraq's oil wealth, regional partnerships, and debt restructuring progress tell a very different economic story. Within just 72 hours, multiple leaks indicate that leading Iraqi banks, specifically Revaluation and Rashid, have begun dry testing digital rate bridges designed for USD IQD live conversions. Contractors within the oil and logistics sectors are reportedly processing partial payments at rates diverging from the long-standing peg of 1,320 IQD/USD. Legislative reforms published on July 18, 2025, confirmed the unification of public and private currency platforms. Economic experts argue Iraq now fulfills the final IMF revaluation criteria. Conservative models forecast a phased rollout, potentially leading the IQD toward parity over 2 years, signaling a fundamental currency repositioning that may already be in motion. Vietnam's approach has been deliberate and unpublicized, emphasizing resilience and fiscal coherence while staying below international radar. For years, the VND maintained a narrow band under a managed float regime. However, a major disruption occurred on July 19, 2025. Forex terminals in ASEAN markets momentarily displayed the Dong trading at 9,700 VND/USD, a drastic departure from its 23,00024,000 range, though it lasted only seconds and was officially called a technical anomaly. Internal HSBC and DBS documents say otherwise. Analysts suggest it was an exchange pathway trial. In addition, Vietnam's economic metrics support revaluation theory. An 8. 2% GDP jump in Q2, and foreign reserves surpassing $120 billion for the first time. Major institutions, including BlackRock Asia and HSBC Global, have significantly increased exposure to Vietnamese sovereign debt. This is often interpreted as institutional foresight of impending monetary shifts. With inflation under control and trade balances improving, several regional economists forecast that the VND could climb towards $0, 0.5 or even $0. 12, though, changes may roll out in institutional layers first before FAS, hitting the public domain. Among the three, Zimbabwe's monetary history is the most complex. Decades of hyperinflation and collapsing fiat credibility positioned it as a textbook case of economic instability. Yet this year, the government, in partnership with the Southern African Development Community SADC, unveiled an ambitious digital gold-backed framework. This hybrid model marries blockchain and bullion reserves, creating a tethered currency backed both by physical gold and limited-issue digital assets. Under this system, each ZWL unit is intrinsically backed, mitigating inflation risk. In a groundbreaking endorsement, IMF country director Teresa Wilhelm labeled the strategy a sovereign stabilization prototype. The early phase includes limited redemption through bullion clearing houses and digital vaults, offering initial valuation at approximately 0.01 ZWL/USD. However, pricing could scale depending on gold's spot value and market demand. If successful, Zimbabwe's transition could redefine sovereign digital currencies, offering a working model for other inflation-ridden economies seeking long-term solutions anchored to real assets. Arguably, the most compelling new evidence involves UWS-based private exchange activity. Over the past 3 weeks, credible sources in Nevada, Arizona, Texas, and Florida have confirmed the quiet activation of Tier 1 redemption centers. These facilities are operating under NDAs, conducting limited IQD and VND exchanges at contractual rates significantly higher than publicly posted figures. One verified whistleblower in Florida claims these centers are operating on scheduled tiers with strict appointment gating. The rates are reportedly visible on internal bank screens and are not hypothetical. While no public announcements have been made by the US Treasury or Fed, multiple banking institutions have implemented procedural updates, Wells Fargo and HSBC being two key examples. These updates include additional verification requirements and internal retraining for foreign currency desks. Industry insiders argue that such operational shifts would only occur in anticipation of a realignment event. For investors tied to currency broker networks or private groups, the timeline to engagement may be shorter than expected, with access to premium tiers unfolding quietly and without mass notification. The international stage is aligning with quiet urgency. In a rare move, the IMF's July 2025 bulletin hinted at realignment opportunities for sovereign currencies not fully integrated into global reserve systems. Though unnamed, analysts widely interpret this as a reference to countries like Iraq, Vietnam, and Zimbabwe. These nations have all made significant strides toward economic stabilization. On Iraq's end, the CBI issued a legal update allowing for strategic value disclosures, an important mechanism for legitimizing foreign-held IQD reporting. This echoes Kuwait's legal prelude to its 1991 currency reset. Simultaneously, the World Bank's Middle East and North Africa update spotlighted Iraq's revitalized trade flows and infrastructure rebuild as key indicators of macro readiness. These updates, legal, institutional, and economic, form a powerful trifecta, suggesting that currency recalibrations are not just likely, but perhaps already in quiet execution. Analysts believe currencies will revalue based on readiness, avoiding volatility by staggering their transitions. Each nation's timeline would be governed by economic fundamentals and political preparedness, rather than arbitrary deadlines. While no agency will confirm a precise date, expert consensus is crystallizing around a staged revaluation timeline through 2025 into 2026. The IQD is likely to be first. Multiple sources inside regional bank clearinghouses suggest that a public exchange visibility window could open between mid-August and early September 2025. This projection aligns with internal infrastructure upgrades and bilateral agreements signed between the CBI and GCC banks. The VND's rollout is expected to be more discreet, beginning with interbank recalibrations in Q4, followed by wider forks platform recognition. The ZWL, still in its testing phase, is projected to become publicly accessible via hybrid digital gold exchanges by late Q3. Conservative models place the IQD between $1.13 and $3, 20 over 2 years, the VND between $0.05 and $0, 12 over 12, 18 months, and the ZWL between $0.01 and $0.07, depending on gold indexing. These numbers represent floor projections. If paired with global debt restructuring or expanded reserve holdings, actual rates may climb even higher, pushing investor returns beyond standard fiscal expectations. US holders of IQD, VND, and ZWL must move from passive hope to proactive strategy. As these shifts unfold, preparedness becomes vital. Investors are advised to verify note authenticity, store currency securely, and avoid risky third-party schemes. Notes should be separated by denomination and logged with dates of acquisition. Exchanges should be conducted only through reputable financial institutions or verified redemption centers. Documents like receipts and certificates of authenticity will be crucial for IRS or legal compliance. Tax professionals should be consulted in advance, as capital gains implications can be substantial. NDA agreements must be reviewed by legal counsel. Do not sign blind. Demand confirmation of exchange rates in writing. Monitor U.S. Treasury and Federal Reserve communications regularly. The opportunity is real, but the margin for error is narrow. Those who act strategically now can preserve both the value and legal integrity of their holdings while positioning themselves to maximize outcomes in a changing financial environment. What was once theory is now supported by hard evidence. Key voices are rising. Dr. Marcus Eldridge, a veteran IMF consultant, emphasized in a recent address that global currency realignments are generational. He cited synchronized moves by the IMF, central banks, and regional networks as indicators that a coordinated shift is happening in real time. FX global analyst Sarah Toma reinforced this by stating that IQD and VND are no longer undervalued by mistake. They are undergoing strategic recalibration. Hedge funds, macro analysts, and sovereign consultants now agree this is not mere market noise. This is deliberate, organized, and timed. Unlike speculative surges of the past, this moment is defined by policy changes, institutional preparation, and economic viability. Skepticism is giving way to cautious optimism, especially as events mirror historical reset playbooks. If these projections hold, we are living through the first act of a restructured global economy, and those paying attention may find themselves on the right side of history. If the revaluation cycle completes as projected, the effects will be transformational. The world could see not only new currency values, but an entirely different global monetary system. Revisions to the IMF special drawing rights SDR basket could include newly valued currencies like the IQD or VND. These currencies may also play roles in future oil trades or international settlements, diversifying global trade beyond the US dollar. US Treasury markets may see inflows from newly liquid nations, while the citizens of Iraq and Vietnam could experience stronger purchasing power. Zimbabwe's gold-backed model, if scaled successfully, could set a precedent for hybrid asset currencies. Ultimately, the financial world may evolve from a USD-centered model to a diversified currency ecosystem. The implications are enormous for governments, institutions, and private investors alike. This is no longer just about profit, it's about positioning for a future monetary structure already in motion. Those prepared now will shape the financial future the rest of the world is only beginning to imagine.